Good afternoon, students. So we are back with another video of your chapter 6, that is banking. So previous video was completed with the commercial banks, the functions of commercial bank, the credit creation of commercial bank. So today we are going to start with the central bank. Okay, so first we'll see the definition of central bank. Okay, the central bank is an apex body that controls, operates, regulates and directs the entire banking and monetary structure of the country. Okay, so it is an organization, it is a body which is the apex, which is lying at the top, and being in the top, it controls, operates, regulates and directs the entire banking and monetary structure of the country. So that is the central bank. So it is the apex, it means the supreme body, the important, the one which is at the top, as it occupies the topmost position in the monetary and the banking system of the country. It is why it is apex, because it is at the top of the entire banking and the monetary system of the country. So all the financially developed countries, they have their own central bank. So India's central bank, in our country we have the central bank, that is the Reserve Bank of India, which was established in 1st of April 1935. So the headquarters of RBI is in Mumbai. So like the financially developed country, all country they have the central bank. For example, in UK there is a Bank of England, in USA it is a Federal Reserve System. Okay, so in our country it is the Reserve Bank of India. So now moving on to the function, the important functions that are being performed by the central bank. So as the central bank of the country, the Reserve Bank of India performs the following function. So the functions are given below. First function is the currency authority. Another function is the banker to the government. Third function is banker's bank and supervisor. Fourth function is controller of money supply and credit, and the fifth function is the custodian of foreign exchange reserve. So these are the 5 important functions that are being performed by the central bank, that is in our case, in our country it is the Reserve Bank of India. So first we will see the currency authority, or it is also called bank of issue. So this function means that the central bank has the sole authority for the issue of currency in our country. In India, the Reserve Bank of India has the sole authority, or it has the sole right of issuing the paper currency notes, except for 1 rupee notes and coins which are issued by the Ministry of Finance. Apart from 1 rupee note and coins, all other currency, paper currency notes are being issued by the Reserve Bank of India, and no other institution has the authority to issue currency. It's only the Reserve Bank of India. So after this, the advantages of what are then, if it is the sole authority of note issue the lies with the RBI, then what are its advantages? So its advantages are, it leads to the uniformity in note circulation. It gives the central bank power to influence money supply, because currency with the public is a part of the money supply. It enables the government to have supervision and control over the central bank with the respect of issue of notes. It ensures public faith in the currency system. It helps in stabilization of internal and external value of currency. So these are the various advantages that lying with the RBI as the sole authority of note issue. So central government is also authorized to borrow money from the central bank, since they are issuing currency. The Reserve Bank issue currency, so the central banks also borrows the currency from the Reserve Bank. Central government. So when the government incurs deficit, whenever there is a deficit, when there is a deficit in the budget, when the expenditure of the government is more than revenue, so government is spending more than what the government is getting, so it borrows at that time when the deficit is there in the budget. It borrows from the central bank by selling its treasury bills. So when the central bank acquires this security, it issues new currency. So the printing of new currencies takes place, and this process is known as monetizing the government debt or deficit financing. So deficit financing means issuing of new currencies. Okay, so that is the called deficit financing. This is the first function of the central bank, that is the Reserve Bank of India, that is currency authority. Currency authority means bank of issue. Moving on to the second function is banker to the government. The Reserve Bank of India acts as a banker, agent and a financial advisor to the central government as well as to all the states government. Okay, So that except that of Jammu and Kashmir, this exceptional that of Jammu and Kashmir, now it is not the, it has been reduced because after the, because Jammu and Kashmir previously it was under the separate jurisdiction before, but now it comes under the our same like the entire India. So it is the exception part you can remove. Okay, so as a banker, it carries out all the businesses of the government. So how the businesses, what are the businesses of the government? It maintains a current account for keeping their cash balances. It accepts receipts and makes payment for the government and carried out exchanges, remittance and other banking operation. It also gives loans and advances to the government for temporary periods. The government borrows money by selling treasury bills to the central bank. So this, as a banker, the central bank is acting the banker's bank like this. So as an agent, the central bank also has the responsibility of managing the public debt. So as a financial advisor, the central bank advises the government from time to time on economic, financial and monetary matters. So any monetary matters, the central bank advises the government. Okay, so in this way, banker to the government. So central bank, your central bank, that is the Reserve Bank of India, act as a banker, agent and financial advisor to the central government and all the state government as well. Moving on to the third function, that is the bankers, bank and supervisor. So there are a number of commercial bank in a country. So there should be some agency, isn't it, to regulate and supervise the proper functioning. There has to be one agency to look after the entire commercial bank. Being the apex body, the top body, the central bank acts as a banker to the other bank also. In this sense, it bears the same relationship with the commercial bank as the later mentioned with the general public. So what the central bank and the commercial bank have the same kind of relationship, like the relationship that is having between the commercial banks and the general public. So this is so in this way the central bank is acting as a bankers to the government, banker to the bank also. So as a banker to the bank, the central bank performs three capacities. So the first is the custodian of cash reserve. What does it mean? Okay, now we'll see this. Commercial banks are required to keep certain proportion of their deposit, that is known as CRR, with the central bank. In this way, central bank act as a custodian of cash reserve of the commercial bank. So you should be knowing. So in a commercial bank, when we were doing, there we discussed LRR, legal reserve ratio. So it is a reserve that is being maintained by the commercial bank themselves. But CRR is a reserve that the commercial bank, they have to maintain with the Reserve Bank of India. So as the commercial bank is having reserves with the central bank, so central bank act as a custodian of all this reserve. Okay. Another is the lender of last resort. So when the commercial banks fails to meet their financial requirement from other sources, they approach the central bank to give loans and advances as a lender of last resort. So central bank will help. So central bank assists this bank through discounting of approved securities and bill of exchange. Okay. Another is the clearing house. As central bank holds the cash reserves of the commercial bank, it becomes easier for the central bank and more convenient for it to act as a clearing house. So all the commercial banks have their account with the central bank. Therefore, the central bank can easily settle the various claims between the commercial bank and the central bank against each other by making debit credit entries in their account. Also, since their commercial bank is having the account with the central bank, so any debit, any credit, so it can be basically cleared as a clearing houses. Okay, so these are the three capacities. So as a banker's bank, the central bank functions in the three capacities. First is the custodian of cash reserve, lender of last resort, and another is the clearing house. Okay. So as a supervisor, central bank regulates and control the commercial banks. The regulations of the banks may be related to their licensing, branch expansion, liquidity of asset, management, merging, winding up, etc. So the control is exercised by the periodic inspection of the banks and the returns filed by them. Okay, so as a supervisor is also central bank is regulating and controlling all the commercial banks. So any the regulation like the bank may be related to the expansion of branch, liquidity of asset, management, etc. All these things, these are being supervised by the central bank of a country, that is the Reserve Bank of India. So till now we discussed the three functions of the central bank, that is the currency authority, banker to the government, and the bankers bank.